Hi everyone. Welcome back to another interesting episode of the Fisdom Wealthpeek. And today with us we have an extremely interesting guest who will be talking about an extremely differentiated and interesting product. So with us today we have Siddharth Srivastava. Siddharth is the head of ETF Products at Mirae Asset Mutual Fund. So Siddharth, a very warm welcome to the Fisdom Wealthpeek.
Thank you, Nirav, for having me here.
So Siddharth, we'll cut right to the chase. Mirae is launching a unique and differentiated product in terms of a passive international sort of strategy. The fund is named Mirae Asset S&P 500 Top 50 ETF FOF. So while the name is really, really long, we know that this is going to be focusing on creating a differentiated approach while investing into the S&P 500 basket, and especially focusing on the top 50 mega cap companies of the S&P 500. So while I'm in complete agreement that the theme is definitely differentiated, but why modify this entire S&P 500 basket at all? So what's the need? What's the merit? What's so great about picking those 50 mega caps that will give an investor an edge over simply investing in a S&P 500 sort of product basket?
Oh, no, so that's a very good question. So I'll probably start by giving a very brief intro about the product itself. So as you rightly mentioned, that this product will invest in top 50 mega caps companies which are listed as well as deemed to be domiciled in United States. So in US market, S&P 500 is a large cap barometer, and we decided to go with a more concentrated offering from that point of view and focus on top 50 mega cap stocks. Now, these 50 mega cap stocks are very big companies, as you can imagine. If you look at a global top 100 companies, US alone captures 73% of the portion. So, the total MCAP of these companies is $23 trillion, which is 8 times the size of India's GDP. So, we are talking about companies like Nike, Walmart, Alphabet, Amazon, Microsoft, Adobe, etc. Very well known names, very well known products and services which have created economic moat. Now, while we were deciding between S&P 500 and this particular product, obviously we thought about S&P 500. We looked at historical performances and data, and there are a couple of observations which we made. First, that these companies have grown tremendously, right? Bigger have become bigger. Blue has become bluer, right? These are bluest of blue chips. We looked at historical data and we found that this top 50 has performed better than S&P 500 index. If you look at a 10-year data or a 5-year data, so better performance with similar risk profile, right? When you're investing in S&P 500, unlike tech funds, you're looking at lower risk, lower volatility also. So it has similar risk profile as S&P 500. And then the correlation is also very good. So it tends to move like S&P 500 has moved. But also one very important factor is that if you're managing a portfolio of 500 stocks, the cost of managing that product is higher, right? And in a way, it gets passed on to investor. Whatever cost we incur, investor ends up incurring it. Whereas managing this product will incur much lower cost than S&P 500 product. So we thought if we are getting a product which is focused on mega caps, well-known companies which are doing better, which are creating economic moats with better performance than S&P 500, similar risk profile, very good correlation, and a lower cost. So why not go with this product rather than just simply chasing a herd and launching an ETF on S&P 500?
Right. I absolutely appreciate the approach wherein you're trying to optimize the risk, deliver better risk-adjusted returns, and if the performance is skewed towards the bluest of the blue chips, why not have a portfolio that focuses on that itself? There is a lot of merit to it. But this begs the second question. Okay, whenever we talk about international investing, I've come across so many questions around this one common subject. Ki, is it the right time to invest now? Markets बहुत bloated लग रहा है in terms of valuations, बहुत stretched लग रहा है. Like you said, these companies have already grown tremendously. They already have larger market share. What's more in store for these companies? Is it very close to the ceiling already? So these are certain questions that we have. So would you like to comment on whether it's the right time to invest, and are the valuations permitting an investment at this point in time?
That's a very fair question. In fact, if you look at global markets, including India, almost everyone is trading at substantial premium, right? If we compare S&P 500, Nasdaq, etc., they are almost at 15% premium to their last 3 year, 12-month forward PE. So there's no denying that Indian markets as well as US markets and other markets are at premium. But see, you have to look from a growth perspective also. COVID-induced recession or other corrections which you saw last year was unlike the previous bear markets, right? In this COVID pandemic, now what we are seeing is the balance sheet of companies have grown stronger. There was very strong interventions from the governments and the federal banks across the globe, because of which what we are seeing right now is, especially when since we are talking about S&P 500 top 50, let's stick to US market only. We are seeing very strong growth in that particular economy. If you're looking at this year projections, it's almost going to grow around 6.2 to 6.4%, which is just lower than developing economies. Next year, it is projected to grow almost 4.4%, which is higher than developing economies on an aggregate. Jobs are getting created. The household savings is more by $2.8 trillion. We are seeing very good consumption happening across board. What people are focusing right now is not so much on valuations, not so much on risk pertaining to inflation also, which is obviously a concern, but on the growth prospects. And US economy right now is giving very good signs in terms of post COVID recovery. So I think when it comes to international investing, people should always invest from a long term perspective. They should at least have an horizon of around 5 years. And if you're having that horizon, so you should probably be less worried about current valuations and look at the growth prospects of the US economy as well as the companies like Alphabet, Nvidia, etc., are posting record numbers. And if you look at those numbers, I think from a 5 year perspective, this seems to be a very good place to be in from an investment point of view.
Right, makes a whole lot of sense. So, in the short term, valuations may be of great concern, but if one believes that these companies will continue to grow and the delta, the change over a longer period is going to be much better. So, at least a long term investor should not be as worried about current valuations because, as we all know, valuations happen in cycles, right? There are times when it may be good, sometimes when it would be bad, but as we all know, timing the market isn't quite everyone's cup of tea, and in most cases a futile attempt. So if you believe in the thesis, I feel there's complete merit for long-term investors to participate. So there is another question which is not exactly around this fund, but more at a slightly meta level, where whenever it comes to international investing, slightly more sophisticated investors are worried about one thing. We are reading these reports around how India is going to lead the economic recovery cycle, how it will be the engine of global economic recovery. It will be driving the larger part of the global recovery, and having more stories centered around India, and India being showered with a lot of limelight. People are concerned whether अगर सारा पैसा यहीं पे बन रहा है तो क्या इंटरनेशनल में पैसा डालना even makes sense. वहाँ पे is there, if India is such a robust economy, why not just diversify within the Indian market? So what are your thoughts on diversifying beyond India, especially in light of information that India could perhaps be leading the rebound?
No, see, the reason why one needs to consider international investing is two things. First is wealth creation, right? And we have enough data which talks about that historically in last 10 years, if you compare US market with Indian markets, US markets have outperformed almost 6 to 7 calendar years in last 10 calendar years Indian market. In fact, if we are looking at this S&P 500 top 50 product, in last 3 years, it has given almost 11.1% higher returns than Nifty 50, and in last 10 years, more than 10% return than Nifty 50. So contrary to what people believe that Indian markets have done well, yes, they have done very well, but that shouldn't make our eyes close to external opportunities, which we feel that US market provide, right? The data talks uh, gives a fairer picture, right? And it has given when we are looking at historical performance. So one is US markets are a very good wealth creation avenues. It has created substantial wealth, much more than Indian markets have. And second is diversification, right? If you compare US markets with other markets, you'll find that correlation is low. In fact, for example, correlation of Indian markets with US market is just around zero point 0.2, which means that you are not keeping all your eggs in one basket by simply investing in Indian markets. If you invest in multiple markets, you will find that at times one market perform, at times the market perform, and your risk is diversified, right? You are not married to a single economy or a single market. And lastly, uh, INR typically tends to depreciate against stronger currency over the long term, and that also adds to the return. And that's a decent portion of additional returns which investor gets by investing in foreign currency. So, for example, in last almost 10-12 years, INR has depreciated around 3.4% against dollar, and this is the additional income which you earn by investing in foreign markets. So I think right now with so much data available, which I've just talked about, it makes a lot of sense to invest externally, right? And especially in US market. And while I also believe that Indian markets are going to perform well, it's an emerging market, but we have seen in past data that India was emerging and still US has done really well. There's no doubt that in future also US markets will do well, and you'll find good amount of diversification by investing in that market.
Right. So I'm in complete agreement. Here's my takeaway on this subject. I feel international investing and domestic investing both are not quite comparable. Both have their own charm. Both have their own propositions. And whenever presented with two equally good opportunities, it is always best to grab both of them as long as you can, right? So, a mix of the two would create an extremely efficient portfolio. It is not one versus the other when you can have both in your portfolio, right? As an investor, I want performers, and if both of them promise to perform, I need to have a great mix of the two of them. Why leave out on any for another, right? So from an investor standpoint, one final question, Siddharth. So this is an interesting fund, the Mirae Asset S&P 500 Top 50 ETF FOF is a really appealing concept. It is differentiated, but what kind of risk appetites, what kind of investment horizon, and what kind of allocations are suitable for this kind of a fund?
No, so obviously, this particular fund invests in US market, right? So the risk which is pertinent to US economy will apply. The forex risk will also apply. So from that point of view, it is suited for people who have higher risk appetite, right? Because you're adding an external market in your profile. But yeah, looking at the data, if you are adding a product which is less correlated with your current holdings, your overall portfolio becomes more diversified. But yeah, I think this product is more suited for people with higher risk profile compared to people who are just investing in local markets. From a investment horizon point of view, I think people should look at around 5 years for this product, because from a taxation point of view also, investing for more than 3 years makes sense, right? This gets taxed as a debt oriented scheme. And right now, when we are talking about valuations and we are talking about market trading at premium, you are investing in markets from a growth point of view, that economies will do well over a longer period of time. We'll see companies doing well. And to capture that growth, you need to have a longer investment horizon, and especially for any international fund, it should be around at least 5 years. And lastly, on the allocation percentage, again, it depends on the person's risk profile. But what we feel that if you are starting initially, you can look at around 10 to 15% of allocation in the international funds in your portfolio, and you can use a blend of, let's say, a tech-oriented product and a more diversified product like S&P 500 Top 50 to get that exposure. Because if you're investing in a tech-oriented product, you are getting married to a theme, married to a tech-oriented companies, which obviously uh, uh, have a different valuation levels, have different growth prospects. But if you're investing in this particular product, you're investing in comparatively a less risky product from a vol point of view, volatility point of view. And so if you're investing, you can use combination of tech oriented and a diversified product to have around that 10-15% allocation in markets like US.
Right. So thanks a lot, Siddharth. I feel we have covered a whole lot about this NFO. We are excited for this NFO. I'm sure many investors are going to be eyeing this NFO and try to seek diversification by through use of this NFO, allocating to this particular fund. So thanks a lot, Siddharth. This conversation has been extremely insightful. I hope it is as insightful for investors as it has been for me. Thanks a lot for taking out time and sharing more about this particular new fund. And also, good luck. I'm extremely confident that this NFO is going to garner a lot of investor interest and attention.
Thank you so much, Nirav, and happy to do this session and great questions. I hope that we were able to provide some clarity to the investors about this particular fund.
Absolutely, just more than clarity. So thanks a lot, Siddharth. It has been great talking.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.